Today in particular, we're going to be reviewing financial restatements, more particularly a trending analysis over the last 16 years of what the impact and issues disclosed in financial restatements have been. Let's jump right on into our presentation, 2016 Financial Restatements, a 16-year comparison. As we do get started, just a couple of quick notes about some methodology and just the population of the database. This 2016 report presentation was obviously produced from data searched and categorized from Audit Analytics. In looking at financial restatements, there were really two types of disclosures in which a company can disclose a financial restatement. It's either an 8K item 4.02 or some sort of periodic report, whether it's a 10K, a 10Q, a 20F, 40F, an amended filing to one of those different filing types, whatever it may be. Our methodology is simply designed to create a complete timeline of the restatement history from 2001 to present. As we do go through this analysis and presentation, one thing I do want to point out, and you'll notice these numbers, and it might initially look like it's a discrepancy. It's not. It is possible for a company to file more than one given restatement in a year. For example, if a company were to file an 8K disclosing some sort of revenue recognition problem, and then subsequently they file the 10K or a 10K amendment that added additional adjustments or new adjustments for some other issue like a cash flow statement, we would create a separate and distinct restatement to track the newly disclosed issue and not duplicate the revenue recognition more than once. So that is one of the main reasons, and you'll see it in the presentation today, why we always make it distinct. In a lot of instances, the number of actual restatements disclosed and then how many companies specifically disclose those restatements. The population of our restatement database, we cover over 15,000 restatements from over 9,000 SEC registrants from January 1st, 2001 to present. And the research for this report and presentation was done as of a download from our database on January 30th, 2017. Just real quick, within the analysis, we're going to identify two levels of restatements, both reissuance and revision restatements. This has become a hot topic in going in and identifying the differences within these restatements. For those that don't know, or just a quick overview, we identify a reissuance restatement as it addresses a material error that requires a reissuance of past financials. A lot of people commonly refer to these as big R restatements. Basically, this was because of the Sarbanes-Oxley Act of 2002. The SEC required companies with that must disclose an 8K item 4.02 when they could no longer rely on past financials. This Sarbanes-Oxley Act went into effect on August 23rd, 2004. The other type of restatement, of course, is the revision restatement. And basically what this does is revise immaterial misstatements in financials. These are commonly referred to as little r restatements, so these are when the revisions happen within periodic reports, 10Q, 10K, with no prior 8K 4.02 disclosure. And then please note that because of SEC Release 33-8400, basically what this does is it exempts foreign private issuers to have to file the item 8K 4.02. So when we talk about looking at, in a lot of the percentages of looking at revision versus reissuance restatements, we exclude the foreign filers because they don't have any obligation or requirement to file that 8K item 4.02. With that being said, that's the quick overview of the methodology and some background information on the presentation. So we're going to go in and jump right into our first polling question here, just so I can get a sense of the audience. And first question is, have you ever been involved in a financial restatement? Yes, no, and then what is a financial restatement? Hopefully no one answers the last. If they do, hopefully they find the presentation extra informative today. So why does everyone go ahead and take 30 seconds or so to answer that question, and then we'll get started with some of the data points and analysis.
And David, while the audience is answering that question, we did have a question come in for you, and this person's asking, is it common for material weakness disclosures to coincide with a restatement?
Yes, and I should say that any opinions, that Audit Analytics is an independent research company, so any subjective opinions like the one I'm about to give that is providing this presentation is my own and not representative of the company. I guess it depends on what the definition of common is. It's not uncommon. In a lot of instances, a material weakness is disclosed, and within that disclosure, they'll reference a past or pending financial restatement. And then it does happen from time to time that a restatement specifically notes that a material weakness caused the non-reliance on the previous financial. So not every restatement has it, but it's not uncommon to see those two go hand in hand.
Great, thank you.
Excellent, great. So why don't everyone go ahead and take another 5 or 10 seconds to answer the polling question. We'll take a quick look at the results and then move on to some of the data points I want to discuss. Okay, hopefully that was enough time for everyone to answer. So we can see that 72% of the people have never been involved in some sort of financial restatement. 27% have. 1.2% of the people attending don't know what a financial restatement is, so hopefully this helps catch them up to speed and sheds a little bit more light on that for them. So jumping in here and looking at the information here, the first slide we're going to cover is looking at the total restatements year over year from 2001 to 2016. Again, here you'll see that we have both unique filers in terms of the number of companies that actually filed a restatement, and then how many restatements were actually filed. So you can see really the high water mark and high point for these financial restatements was 2005 and 2006, peaking out at over 1,800 financial restatements filed in 2006. Really, since then, it's been a fairly substantial drop. The last 6 years or so of restatements have been relatively stable, with 2015 and 2016 both experiencing decreases and bottoming out in 2016 with 671 restatements by 615 unique filers. I find this this table here interesting because this not only gives you the number of unique filers and the restatements, but this takes a closer look at both the growth rate and denominator population in terms of what the actual population of companies was that could have a financial restatement. So this shows a couple of things. You know, not only the growth of restatements from one year to the next, but if you look at the denominator population, and we've done some recent research on this, you can really see a somewhat steady decline in just the total number of SEC registrants dating back from 2006 to present. As I said, we do break out the restatements by both revision and reissuance restatements. And you can see right here that really what we've gone into is we've previously noted the requirement for 10K filers to disclose the determination that past financials can no longer be relied upon. The item 8K 4.02 went into effect in August of 2004. So because of that, 2005 was really the first year that the reissuance, the full year that the reissuance restatement came into effect. And you can see right out of the gate, the first 2 years were the highest in terms of both the number of companies that had reissuance restatements and the total number of reissuance restatements. So after that slight uptick from 2005 to 2006, it's been a steady 10-year decline since then, and really it's leveled out and bottomed out really in 2016 with only 123 companies filing 130 reissuance restatements. On the other end, what we have is the revision restatements, and again, This is what Audit Analytics defines as any restatement revealed in a periodic report with no prior disclosure of the 8K item 4.02. These restatements don't undermine reliance on past financials and are typically very minor of concern. And as you can see, the percentage of these restatements has increased steadily from 2005 to present. So we started out with just over 32% of restatements in 2005 being what we call a revision restatement, all the way up to 78% in 2016. So it's a huge uptick in terms of how this percentage has increased. It's more than doubled since 2005 and what percentage of financial restatements are considered, or what we consider to be revision restatements. I took that same graph there and placed it in the table here. And so what this shows me, or my takeaway from this, is this looks at the total number of restatements, the total number of restatements from 10K filers. As I said in the introduction, those are the filers that we identify as the ones that can file the 8K item 4.02, so it filters out those foreign filers that don't have a requirement to do so. And then we give you the restatements from those 10K filers that did not have a non-reliance disclosure. They were just mentioned in the periodic report. So again, this shows that steady increase in percentage. But what you'll notice is that in terms of the total number of restatements without the 8K item 4.02, while the percentage goes up, the total number remains relatively flat from year to year. So it started out with 442 in 2005, and we're at 470 in 2016. So while there has been some ups and downs in that, it peaked up over 600 in 2006 and 2014. From 2005 to 2016, the starting and end point are very similar. So really what this tells me is that the total number of restatements itself has been the substantial takeaway and the substantial drop. In the terms of the number of these revision restatements, for the most part, they've stayed fairly similar, and the percentage going up is in large part because of the total number of restatements coming down. In terms of the impact and effect that these restatements have, and what the coverage of them are, the first thing I'm going to look at here is we've gone in and broken out quarterly versus annually restatements. And really how we define this is basically any restatement that covers more than 360 days for the restated period. We determine that to be an annual restatement. And then any restatement that covers less than that period, so 359 days or less, we determine that to be a quarterly restatement. As you can see, not a lot of movement in the chart here. From the last 10 years, the quarterly restatements have held fairly steady, from 31% of restatements to 36% of restatements. And the last 3 years have been extremely similar in percentage in terms of how many of these restatements have been quarterly versus annual. And again, this is that same chart there, just broken out into a table, taking a look at the total number of restatements from year to year, and then what percentage of those were quarterly versus annual restatements. On to our second polling question here. We're about to get into and take a closer look at restatements broken out by the filer status of each company. So my polling question here reads, from 2003 to 2016, what was the only year where accelerated filers disclosed more restatements than non-accelerated filers? So go ahead and take a minute or so to answer that. And Lark, if there's any questions that you want to toss my way while people answer, go right ahead.
Great. Here's one that I think is good. And they want to know from your perspective why we're seeing a drop in restatements. So what's triggering these reductions?
Excellent question. I think, at least from my perspective, I don't think it was, I think you could easily deduce that it was related, that the uptick in restatements in 2004 and 2005 and 2006 was directly due to the new requirements of Sarbanes-Oxley, increased scrutiny on the company's financial reportings. And then I would like to think since then, it's been over 10 years since then, that the companies have gained expertise and knowledge in how to avoid such issues. And I think on a whole, there's been a lot of new regulations and requirements put in place in the last 10 years that have worked hard to increase the transparency of a company's financial reporting. So I believe that that would definitely have an effect on that. And then the last thing from my point of view as well, which I alluded to in a previous slide, is just the general decrease in the total number of SEC registrants over the last 10 years. It's been a fairly steady decline in the number of SEC registrants, and obviously less SEC registrants means less companies to have the opportunity to restate.
Thank you for that.
No problem. Excellent. So if you guys want to take another 10 seconds or so to answer this question, we will go ahead and jump on over into the results. So we have, looks like 2005 and 2010 are the leaders in the clubhouse, and this is interesting because as I click through to the next slide, 2014 came in with only 12.9% of the votes, and if we look at the slide here, 2014 is the only year, in fact, where accelerated filers disclosed more restatements than non-accelerated filers. And really, in taking a closer look at this chart, you can see that since 2006, non-accelerated filers have experienced a steady drop in the number of restatements from 909 all the way down to 284. Accelerated filers had a decrease in 2015 to 2016, but really since hitting a low of 174 in 2010, they've mostly experienced increases in terms of the number of financial restatements in which they've been filing. What this next table does is, again, looking at this by filer status, is we've really broken this into 4 different types of filers. We've looked at the accelerated foreign filer and the non-accelerated foreign filer, and then the accelerated U.S. filer and the non-accelerated U.S. filer. And it shows how the total number of restatements disclosed by this registrant status has evolved from 2010 to 2016. Really, you can see that a lot of these, especially the foreign filers in the last 4 or 5 years, their numbers have held fairly steady. There's been a little bit of fluctuation, but in 2016, in terms of the percentage of restatements disclosed, the only one that experienced an uptick in the number of restatements disclosed percentage-wise was the accelerated foreign filers. If we break this out and then just take a closer look at the reissuance restatements from U.S. accelerated filers, you can see that in addition to the overall number of restatements, accelerated filers also experienced a drop in reissuance restatements during the 12 years included in this chart. So it peaked out at 459 in the reissuance restatements, and it's gone all the way down to 51 in 2016. We previously showed that the number of restatements for U.S. accelerated filers a couple of slides ago had increased, and mostly increased from 2011 to 2016. And as you can see, it's almost the exact opposite trend with the reissuance restatements. So there have been some minor declines in here, inclines, but overall it's been a steady decline for the number of reissuance restatements. So the reissuance restatements are dropping. The total number of restatements went up for the accelerated filers, so clearly that tells me that they're disclosing more revision restatements, which are, they're still restatements, but they're much less significant in impact. We also examine the impact that these restatements have on net income, and in this chart here, or the graph I should say, we've gone in and looked at the largest negative restatement from 2002 to present. As you can see, there were major restatements, and this chart's in millions, so that high water mark in 2004 that says 6,335, that's actually $6.3 billion in terms of a restatement. And then the subsequent year had over a $5 billion restatement disclosed as well. So you can see, again, right when a lot of that Sarbanes-Oxley disclosures happened and some of those large failures happened, there were extremely substantial restatements, and 2016 was really the first time since 2011 that we had a restatement go over $1 billion in terms of net impact. And I should say impact on net income. And this goes in and details out which those companies were, correlating to each one of those largest negative restatements by year. So obviously the 2004 and 2005 one, no surprise that Fannie Mae was 2004 and AIG was 2005. Those were two very notable failures that got a lot of coverage. The lowest one on this is Computer Sciences Corp, who had only only a $286 million restatement in 2014, which over the last 14 years, in terms of largest by each year, theirs was the largest one. In addition to that, what we've gone in and done as well. So those were the exceptions, the large ones each year. We've gone in for the NYSE, NASDAQ, and the NYSE market, which was previously EMX. You can gauge the severity of a restatement by seeing what the average income on net income was for these companies traded on these three exchanges. So you can see in 2016, it's actually negative 7.9 million. Which is the second highest in the last 10 years. For space-wise, this chart was truncated, but in 2005, I can tell you the average adjustment was 21.3 million negative, and in 2006, it was 17.8 million. So these are still large numbers, but you can see really since those high water marks in 2005 and 2006, it has been mostly a decrease in terms of the financial restatements. In terms of how many of the companies actually have a restatement that has an impact on income, you can actually see here we've gone in and we've examined of those companies traded on those three major exchanges that we mentioned. In 2016, 218 out of 395 restatements had no impact on the income statement, which was 59% of restatements had no impact. That was high. The high was in 2014 at 60%, but you can really see since 2009 to present, it's been a steady increase with more and more restatements having no impact on the net income. I think you can make the correlation with revision restatements being non-material and less adverse, that there's less of an impact on income. The other thing that we've noticed, and you can probably attribute the rise, at least in some degree, is that there's been an increasing amount of cash flow restatements over the last 6 or 7 years. By definition, a restatement on the cash flow statement has no impact on the net income on the income statement. Some other data points and ways of looking at the impact of the financial restatement. We've gone in here and looked at the number of days that were restated by the adjustment in each given year. In other words, how many days did the restated period span? The information, this peaked in 2005, where the average restatement spanned 740 days, and then subsequently it bottomed out in 2009 to 491 days. Since then, it's a couple of peaks here, but it's remained relatively flat. And there was a slight drop from 2015 to 2016, with the average restatement period dropping to 510 days. Again, and what you've also identified here is we've gone in and looked at this in a chart format, and included in this is the growth percentage. So you can see that the biggest drop from one year to the next was actually 2007 to 2008, where the average restated period in terms of number of days went from 639 down to 505. The largest jump was 2004 to 2005, and then subsequently 2016 had a 5% drop from 538 down to 510 in terms of the number of days restated. This is not to be confused with the number of days restated, but this slide represents the number of days to restate. So what this really is for companies on the 3 major stock exchanges, we looked at how long it took the company to file their restatement after the initial disclosure of said restatement. In other words, how long did it take them to make the correction? One thing to note, because of when this report was done at the end of January, it is possible and probably even likely that the average of 5.37 days in 2016 increases, mostly due to the fact that the analysis was completed before a lot of the 2016 annual reports were filed. A lot of restatements will probably have references or corrections, amended filings that could skew that upwards a bit. But really, I think the key takeaway here is looking at these in terms of the number of days it takes companies to actually restate. In 2007, it was averaging 30 days, and from 2013 to present, it's really been 5.5 days or less. So companies are getting, without question, much more efficient and effective in actually restating their filings. As previously mentioned in some of the earlier slides in methodology and population, we grade all these, and we have a team of expert analysts who read all these filings. And we've gone in and developed a taxonomy of over 50 issues as to why a company could have a financial restatement. So of these 50-plus restatement issues, we've really identified 24 of them that are most prevalent and pop up in some extent at least year to year. So really this chart here is of those 24 major issues we've identified, how many of them are included on average within each financial restatement. So simply this is how many issues a company is stating that led to the financial restatement. So what we've gone in and done is you can see that this information peaked out in 2005 at an average of 2.4 issues per restatement, and we've dropped down again to 1.55 in 2016, which is near the low mark. It looks like 1.49 and 1.48 in 2011 and 2012 were the lowest number of issues per restatement, but we're getting back close to that again with 3 years of a steady decline from 2014 to 2016. Keeping in trend with the issues associated with financial restatement, from 2001 to 2016, historically, what has been the most common issue associated with a restatement? We have 4 issues listed below here: debt-related issues, revenue recognition, inventory, vendor or cost of sale issues, or the final option is a cash flow statement classification error. So why don't you go ahead and take a minute or two to answer those, and I'll go ahead and field a question or two from Lark while everyone mulls over the answers.
All right. Yeah, we have a number of questions to pick from. The question I'd like to ask is, has Audit Analytics performed any predictive analytics on expected future trends in terms of restatements?
That is a loaded question. We do actually have a data scientist at Audit Analytics that we've had some large subscribers outsource and contract to help predict the probability of a financial restatement by looking at other accounting failures disclosed by the company. I don't have any of that analysis in this presentation. I'm not as familiar with it, but I'm happy to take that conversation further offline. I think it's kind of a sensitive subject, and it can be difficult to take a deeper dive into, but there is a demand, and people always want to know what the indicator of a financial failure is, and so we are doing what we can to try to correlate some of our data to that on a contract basis with some of our clients.
Thank you.
No problem. So if everyone wants to take another 10 or 15 seconds to finish up, we'll jump over to the answers here. All right, so let's go in and take a closer look. And I am not surprised by these results. Revenue recognition is always a popular issue. And believe it or not, the number one reason for my financial restatement for every year since 2005 has been debt-related issues. So if I go in and take a closer look at our slide here, you can see all the items lined out at the bottom. But really, since 2005 to present, it's been these debt-related issues that have been the number one reason for restatement. This was indirectly mentioned in previous slides, but there has been a substantial increase in cash flow statement restatements. In 2001, only 0.5% of all restatements were related to a cash flow statement issue. And you can see that has increased almost every year. There's been a slight drop-off in the last 2 years, but it hit a high point of 21% in 2014. And every year from 2011 to present, cash flow statement issues has either been the second or third most common issue for a financial restatement. One of the reasons, or a substantial reason for the rise in cash flow restatements, was due to an increase in subsidiary guarantor cash flow statement restatements in order to comply with Rule 3-10 of Regulation S-X, which is frequently in response to a lot of SEC comment letters about that issue. And you can, again, what we have here is you go in and you can take a closer look, and these are the most popular issues on a year-by-year basis: the number of restatements, the percentage of restatements for each of these top issues. You can really see that in most years, those debt-related issues, in terms of percentage of restatements, have topped out over 17–20% of restatements. Towards the end here, what I want to do now is take a closer look at some of those more specifically related restatement issues and what their trends have been from a year-to-year basis. So I have 4 or 5 of them that I'm going to briefly go in and cover here. So this, the first one we're going to do is look at restatement issue analysis for tax-related restatements. And just so everyone's aware, we define this tax expense, benefit deferral, etc. issue as being consistent of errors or irregularities in approach, understanding, or calculations associated with the various forms of tax obligations or benefits. Many of these restatements relate to foreign tax, specialty taxes, or tax planning issues. Some deal with failures to identify appropriate differences between tax and book adjustments. Excuse me. So really, this is the catch-all for tax-related financial restatements. And you can kind of take a closer look at, in terms of volume of restatements, how many there have been. Again, as what's been similar with a lot of these, 2005 and 2006 in terms of the volume of restatements is the high point with 183 and 189 respectively. 2016 saw 98 financial restatements related to tax issues. And then if we go in and look at that as a percentage, while 2005 and 2006 were the high points in terms of volume of restatements, you can see percentage-wise it's been almost a steady uptick from 2009 to present, with 14.6% of restatements in 2016 being because of a tax-related issue. And if I go in and take a closer look at this, this gives you the number of actual restatements, the number of total restatements, and then what that percentage was. The next one was that cash flow statement classification error that's popped up a couple of times. This restatement consists of errors or irregularities in approach, theory, or calculation that manifested themselves in cash flow statements that are not consistent with GAAP. These misclassifications can affect cash flow from operations, financing, non-cash, and other investments, FAS 95 classification errors. And again, looking at the trend here, you remember where I previously said that it was only 0.5% of all restatements in 2001 were cash flow related. It was only 3 restatements in 2001 that had that specific cash flow error. Again, peaked out in 2006 with 222 restatements being related to cash flow. There's been some valley since then. It peaked again at 180 in 2014 and subsequently is all the way down to only 95 cash flow related restatements in 2016. In terms of percentage of the restatements happening with these, you can go in and see what that looks like. So again, we have that half a percent in 2001, peaking slowly up, peaking all the way at 21% in 2014, and back down to only 14% of restatements having this cash flow error in 2016. And then again, overlaying those number of restatements, the total restatements, and then what the percentage was, you can see how that's gone in and affected the overall percentage and prevalency of this issue. I'm happy that everyone asked or answered the revenue or leaned revenue recognition in my previous polling question. So I'm going to go in and answer another polling question. This one is specifically related to revenue recognition issues. So in which year were the most revenue recognition related restatements disclosed? I'm hoping while you guys answer this, if there's another polling question, I can send it my way. Hopefully I've kind of alluded to what a good answer would be on this slide.
Yes, there's a number of questions I'm having a hard time selecting actually. Here's one question. It's related to 2005 and 2006. So this person's asking if was the 2005 and 2006 high water mark of restatements related to the backdating of stock options?
Excellent question. Unfortunately, I do not know enough about the subject or know enough detail about the backdating to go in and look at that. I can tell you that we do track executive compensation issues as a reason for restatement, so that is a search that could probably be done or at least inferred from using Audit Analytics. So if I get a chance to answer some of these questions offline in an email response, I can try to pull together some quick research on that question to see if there is any inference with that.
All right, thank you very much.
No problem. So if everyone wants to take another 5 or 10 seconds to finish answering these questions, go right ahead. I'm going to click through. I'm guessing that most people, based on what we've been talking about, the 2005 and 2006 were the highest 2 answers on this, and they were. 2005 is the correct answer. Clicking through here to the actual slide itself. In 2005, there were 226 revenue recognition, that's a tongue twister apparently, issues filed for the financial restatement. There was actually a sharp drop from 2005 down to 2010. A little bit of an uptick after that, and the trend has been downward since then to only 92 revenue recognition related restatements in 2016. In terms of what the percentage has looked like in that, there has been it was relatively flat to start, has since dropped, and then it has risen a little bit from around 10% in 2010 to 2012 to back up to over 30% in 2016. Sorry, 13%, not 30. And you can see the restatements on a year-over analysis here. Clicking through again, this is very similar to the previous ones. Accounts and loans receivables, investment and cash issues. Basically, we define these as irregularities and approach theories of calculation with respect to cash, accounts receivable, loans collectible, investments, allowance for uncollectibles, notes, receivables, and or related reserves. Very similar. It's 2005 and 2006 are the high water marks, and it's been a slow decline down to 2016. Looking at what the percentage has been, this one on the whole I feel like has remained relatively flat with a couple of peaks in specific years like 2002, 2005, and 2014. But it seems like it's held steady at that 8 to 9% mark. And again, we have it over year. The last one I wanted to look at here was PPE, intangible or fixed asset issues. And basically this deals with identifying errors or irregularities either in calculation approach that have taken place in the recording of assets, goodwills, intangibles, contra liabilities that are required to be evaluated or assessed for diminution and on a periodic basis. So you can see, again, looking at these right here, the peaks are where you expect them to be, 2005, 2006, and it's come down substantially, only down to 49 restatements having this issue in 2016. In terms of what the percentage was, in this instance, the percentage follows fairly closely to what the total number of restatements was. And again, we have a year-over-year here, looking at the number of restatements, the total restatements, and then the percent of all restatements. Lastly, what I quickly wanted to do is go back to Computer Sciences Corp. And do a quick case study on their $286 million restatement. I picked them because they were the smallest of the restatements that were disclosed in terms of the largest net impact on net income over the 16 years we've looked at. So real quickly here, we just have an overview profile page of Computer Science Corp, who their auditors, how long they've been there for, some demographical and financial information on them. I've gone in and pulled out their actual restatement. So what you can see here is all the related issues they had within that financial restatement. So you can see foreign related party issues, inventory, vendor, and cost of sale issues, PP issues, revenue recognition issues. Going back to one of the first questions asked, you can see they did note a material weakness, either Section 404 or 302 of Sarbanes-Oxley was identified. We give you some impact on what a candlestick chart on what happened with the stock price around this time by themselves, and then we go in and overlay that with the Russell 3000 to see if the restatement had more of an effect on the stock price than what was happening within the Russell 3000 itself. I've gone in and pulled out the text of the restatement here. It was a pretty long disclosure in terms of what they disclosed within the restatement, but I found this particularly interesting, mostly because a lot of this centers around finding by the audit committee's independent investigation. It also references the SEC in here having an investigation as well. So you can see they fell under quite a bit of scrutiny for the accounting methods that led to this financial restatement, which is one of the reasons why I went ahead and picked them. I'm not going to bore everyone by reading the text there, but it's there if you do want to go in and take a closer look at what I found one of the most interesting paragraphs of the restatement disclosure. In terms of what other types of issues they've had before in previous to the financial restatement, you can go in and see where we've noted notable, significant, and critical issues from 2013 to present. One of the reasons why I did pick this is I wanted a couple of years of data both before and after the restatement to see if there was any indicators leading up to it and if there were any subsequent financial reporting errors after the financial restatement. So with that being said, before I get to my last slide, I'm going to ask everyone to make an educated guess here. How many late filings has Computer Science Corp had since their $280 million restatement filed on December 29th, 2014? So go ahead and take a minute or so to answer that, and I'll get the Q&A started if Lark wants to fire another question my way.
Sure. We continue to get a lot of really good questions. I'm just selecting the right one. This person wanted to know if the findings that you discussed today during the webinar, if they're considered stealth findings. Is that something you can answer?
If they're considered stealth findings?
Correct.
Well, I think it's not uncommon for there is some terminology in the market and accounting space where people often refer to revision restatements as stealth restatements, quote unquote, because there's no 8K item 4.0 disclosure. They're a little bit more difficult to find. I think a lot of people have moved away from that terminology because it has a very negative connotation to it. So a lot of people refer to them as kind of big R and little r restatements, but I'm sure there are still people who refer to these revision restatements as stealth restatements because you have to actually go into the 10K or 10Q and dig a little bit deeper to actually find them.
Okay. Thank you very much.
Yeah, no problem. So it'll take another 10 seconds or so for everyone to answer here. And we'll see how many people have guessed. So 2 and 3 leaders in the clubhouse, and actually everyone saved the last question to get right. So either they clicked ahead or were taking a closer look at that previous slide. But the correct answer is 3 late filings since their 8K 4.0 disclosure, the initial notification of their restatement on 12/29/2014. So they've had 3 late filings, a 10K on April 3rd, 2015, a 10Q on January 1st, 2016, and then a 10K on April 1st, 2016. They've had 1 adverse 404 opinion from their auditor and a management, and then 4 disclosure control material weaknesses. So there is no definitive way to say that all this is definitely because of the restatement, but because of the fact that in the restatement they did note Section 302 or 404 issues past or pending, I think it's safe to correlate that a lot of these issues with both the restatement and their adverse SOX disclosures, there's a direct relationship between them. So that really covers everything that I wanted to cover in terms of restatements today. I hope I didn't bore everyone too much, and I hope it gave everyone a great idea of the type of trending and monitoring you can do with financial restatements. We do have 5 minutes left. I know Lark said there's been a ton of questions coming in, so I would love to use that 5 minutes to answer some additional questions.
Great, thank you for doing that. This one, the first one I'll start off with, focused on tracking industries. So this person wanted to know, do you track the industry of the company that files the restatement, and are there certain industries that have more restatements than others?
We do. We do track industry. You can track industry. I don't think we've ever done any specific restatements based on industry. I think, though, that I'm not sure if one industry would have more restatements than another. I think what you would probably see is that that certain industries are more prone to specific issues than other industries. For example, I think if you looked at the software industry on a whole, I don't know for certain, but I would guess they would be a little bit more prone to revenue recognition issues and restatements.
This one goes back to one of the questions we answered in the very beginning. This person wanted to know, why would a restatement not include a material weakness disclosure?
Well, I guess that it's, they're on a whole, they're really two distinct separate issues. A material weakness typically relies on your internal controls over financial reporting. So if you had a material weakness in your internal controls over financial reporting, it's the company or auditor identifying that there's some sort of process in place that is lacking or doesn't have the proper controls. Just because that process isn't in place or there's a deficiency in it doesn't mean that an error is going to necessarily result out of that. So you can do things wrong for many years and still potentially come up with the right answer, I guess, is the very layman way of saying it. So like I said, there is correlations between them, and we oftentimes see restatements and material weaknesses coinciding together. But a lot of those disclosures, they do live separately and are unrelated to one another.
Great. This is, I'll ask one more question before we close out, and this one's a good one. Does Audit Analytics find any trends in, how the need to restate was found? So who was the identifier of the restatement and, caused to put everything in motion? Was it the external audit firm, or do investors typically find them? Does Audit Analytics have any data points on this?
So we've never really looked to see if an investor has found a financial restatement. We do track certain data points, like if there was an SEC investigation that led to the restatement, like if there was a board letter, things along those lines. And then in addition to that, we do track 4 different auditor points for the financial restatements. So whenever you're doing restatement research or searches within our database, you can always identify who the current auditor is for the company that restated, who the auditor was at the disclosure date, who the auditor or auditors were during the restated period, and then any auditor or auditors that signed an opinion during the restated period. So there are some ways to look at the data that way, but in terms of who specifically identified the restatement, unless they explicitly say it came from an SEC investigation or there was a explicit comment letter advising the company to restate their filings, it's difficult to deduce who that was.
All right, thank you for answering that question. I think that's about all the time we have for questions. So do you have any closing comments before we end the webinar?
No, that was great. I appreciate everyone's taking an hour out of their time to listen to me ramble on about financial restatements and some of the trends that happens. I will try, if Lark and Katrina can send me the questions, I will do my best to answer everyone's question. And again, I appreciate everyone's time today. Thank you.
Thank you. And I put David's contact information up on the screen, so if you want to reach out to him directly, feel free to do so. And have a great day.